This conference will now be recorded.
Before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teachings, and content are for educational purposes only. All materials and lessons are protected assets of Market Making Strategies LLC. Any plagiarism or sharing of our content is strictly prohibited, and any violators are subject to applicable laws. With that being said, this is Traders Exchange. It's November 20th, 2024. We have questions that were sent in by traders, by students that we'll be going over, and anything else from the day that we might have any questions on. So, what we're going to do first, before I go over these questions that were sent in to us, we've obviously seen that the last 2 days were a lot slower. The mornings were very, very slow. Not many trades to be had. But there's also, although there wasn't trades, meaning in day trades as per se, high percentage ones anyway, there's still lots of information that does come out, lots of buying, lots of selling, lots of setups that would be getting ready or acquiring for a position in order to then move towards that target at a later time. So is there any questions that anyone has about anything today or yesterday or just in general that you want to ask me? This is a good time to ask. I can answer that question for you with no problems. Does anybody have a question before I go into Traders Exchange questions that we have? And if you don't have any questions or can't think of it yet, I could just start on these questions and maybe give about 10-15 minutes at the end. And all I need you to do, if you have them, is just type it in the chat and I can answer it from there, not a problem. Okay, so the first question that we have, how do you manage to stay fully focused during a session, especially when you have a private life and work? This is a really interesting question. So just to answer it formally for the first part, let's not forget, either way, I am human. We are all human. We all have moments where personal lives or business lives or things outside can get in the way. And they will get in the way if you allow yourself to expose to them when you're trading. So, what does that mean? So, let me give you guys a quick example of how my morning starts and what precautions do I take and so forth to keep my exposures limited, to keep my thinking clear, to keep my mind clear. So that way, when I come here first thing in the morning, I am fully focused on my trades. So, just to give you an example of how my day starts, my morning starts waking up at 5 o'clock. I'm in the gym by 5:45. As soon as I finish my workout, which is around 7:15, I head straight back home. Now, the second I wake up, no matter if it's a trading or a work day or even a weekend, I never, ever, ever look at my phone. I don't even turn it on. I don't care what messages, emails, notifications, I don't care. I will never, ever look at my phone. I wake up, go through my protocols of morning duties, go to the gym. Why do I work out? Gets my energy flowing, gets me invigorated, get my hormones going, gets me all nice, ready, gets me personally into a focus mode because waking up at a certain time, going to the gym, working on my health, working on my fitness, working on my mind, that's all discipline. That's all part of a habit. Not looking at my phone, not watching TV. I don't listen to radio. I don't do anything. I wake up, go through my protocols, go straight to the gym. And even at the gym, and I work out at least 3-4 days a week with Millen. I've got him in the same habit. So when we go to the gym, we don't even have long conversations or anything. We keep our minds clear. So we focus, we get to work. As soon as we're done with our working out, we're straight home. So is he. I get home, I eat breakfast, I turn the computers on. Again, I am not ever looking at my phone. I don't care who calls. The only one time I'll ever pick up the call if it's an emergency from my parents, my sister, or something of that nature where I just cannot let it go. Otherwise, like this question is stating, it is so easy. Now remember, anything you expose yourself to now gets ingrained as a thought. And we have 72,000 thoughts that circulate in average in our head a day. So you've got all these things that are going on and you're looking for clarity so that way you're not going to get any mental disturbing while you're getting ready to trade. So how I limit all of that is I have no contact with anything. By the time I get to the computer, I have no clue what's going on in the world. I have no clue what's going on in anything. Some of you already know I don't have social media. I deleted social media about 4.5 years ago. The only thing I have is LinkedIn for business. I deleted all my social media. I stopped watching TV for the purpose, quite honestly, not only because I think it's just terrible exposure, terrible information that people are receiving these days on social media, but it's also I want to keep my mind as clear and honest as possible when I'm trading. I don't want to have those thoughts that just have no place in my mind for when I rather focus on just having a clean output for trading. So my routine habits in the morning are catered around having the mindset that I need to trade. Now, what I always do is after morning meeting is done about 9:10 to 9:15, I go into a 5 to 10 minute meditation. And I do a meditation to clear completely everything out of my mind, find a way through so that when I'm ready to trade, I already have all my points written down of any trades that I like, any particular information on those trades that I felt like was important. I have it written down. So the second that I'm out of my meditation, around about 9:20 or 9:25, my eyes open, my mind's clean. I read that information one time and I am ready to trade. Now, the second thing that I've always talked about, and I want to talk to everybody here about, is you need to understand what your relationship with your platform is. What is your relationship when you sit down at your platform at the desk? Do you sit down? When I was first getting into trading, and this was for many, many years, I would come and sit down and I would have anxiety in my stomach. I would certainly be a bit nervous as we're getting closer to the open. I would be unsure. I would basically have the build up and makeup of retail who's looking to gamble and hope something works out. But what do we know is the reality of how our state of mind is if we are coming to our platform. We have a bit of nerves, we have a bit of anxiety, we're not quite sure. What is that basically us telling ourselves? Who wants to type that in the chat and give it a go? So if you come to the computer and you sit down on your platform and you're already fidgety, if you're already a bit anxiety, you're a bit nervous, and you're not unsure, and that increases as the time comes to 9:30. What do you think is really going on and why you honestly feel that way? Who wants to give this a go? You can type it or you can come on and speak. This is, as I say, active learning, not passive. So I'd love to have people speak with me and I can give you some ideas. Who would like to have a go? Anyone?
Hey, Doug, that's it.
Hey Sid, how are you?
Good, and you?
Yeah, doing
So,
well, thank you.
so I think to your question, the important thing is, having a very, very good clarity of what you want to be able to do with a clear plan outline. Now, this is regardless of trading. I guess if you want to just get into any skill, you're learning a skill, you're getting into where you want to execute it right now, you need to be able to see, visualize how you want to be executing that strategy, whatever it is, at that point in time. Not having that clarity, or maybe there are other situations that are going around in someone's life, in which case then someone has to just sit down, relax, take a back seat, not actively trade, and just learn. I mean, that's a good opportunity to just learn and calm your nerves, because that's not a an activity you would want to take part in when you're really jittery. Um,
Hmm.
but essentially, your mind has to be absolutely clear. Most of the things that you generally that I have seen you and other mentors do is, you have everything like the back of your hand, and there's very little thinking or decision
Uh-huh.
making that happens during execution. And for us, as we're learning through this, we tend to think a lot. We tend to make things complicated. Obviously, there are a lot of variables that we have to work through before we can refine it further, but we need to get there. And that's where I believe is, where you will really find peace and you would really enjoy the work that you're doing.
So that was, I love that answer. That was a very nice, detailed answer. Thank you very much, Sid. And I like the way you said that because it's going to go into a bit more of a detail of what part of your mind and what part of you is being used. So something that you said is teachers or people like me who have got to that certain level of trading, we no longer think. We have a plan, we enact the plan, and we execute and manage off our plan. So something very important there. When you come to your platform and you have all these issues going on and you have certain stresses and certain things to consider and outside in your life, all of that is pulling on your emotional strings. So when you come and you don't have a plan, when you haven't done the work and understood what a high percentage trade is, and you haven't set up your trade on the information that you see and create a plan that you simply now have to follow instead of thinking about it, what happens is when that emotional state is there, you're basically bringing in all of the outside issues into your trading. And when you allow emotions to control or figuratively control how certain elements of your day work, the emotional level will always have the upper hand. So a successful and consistent day trader is going to recognize one thing, and one thing most importantly is emotions have zero place in trading. Now, when I first started, what I used to do is I used to write all these notes, and I mean loads of notes to myself from the day before. And I'd write three things. And I did this for years. And I'd write down three elements. One, that was hindering me that day. Two, what I did really good that day. And three, how I can be more efficient the next day. The problem with that method, and I did it for years, is you are asking emotions to play a role in your trading. See, you can't cut off or turn off your emotional state when you're trading. It's just not possible. But if we go towards the emotional state and we use fear, we use excitement. Yes, excitement can be a huge detriment to your trading. When you get a nice win, when you make a bit of money, you get excited, you get confident. That can be a huge detriment to your trading. So when you go towards trying to control an emotion, the only thing you're doing is adding an emotion against an emotion, but in the end, you are still playing in that park or playing in the playground or sandpit where nothing but emotions exist. They will never work in your favor as a trader. What you need to recognize is in order not to be an emotional trader and in order to be a protocol, disciplined, logical trader who bases his trading off the information and data presented, when you take that trajectory, when you go that route in how you're going to trade, you'll recognize quickly that emotion finds it hard to follow logic because logic has a definitive black and white. Emotion lives in gray area. Emotions are susceptible to everything, as whereas logic is it's either black or white. This equals this will give you a 70% trade. 30% of that, I mean, the opposite side of a 70% trade is 30%. So then we can look back and say, what does that 30% look like if that was to be the case and not the 70% that we planned for? Do you notice that even as I speak in a more logical, in a more planned manner, it's very hard or impossible for me to add any form of emotion because it doesn't fit into a logical approach. So what changed for me is a couple of things. One, I do like what Sid said, and it's true because I've said this in a lot of our night reviews for years, is my relationship now with my platform is I only find my comfort, my peace, my joy, my understanding at my platform more than any business or family setting or anything else I have. I'm only at my most comfortable when you just leave me alone at my platform. And that's because here, believe it or not, is where I feel most in control. And that confidence of saying I feel most in control when I'm at my platform is me saying that because I have proved that when you come here and you are disciplined, when you respect the stock market, when you respect what this game means, what this business means, when you respect the market makers that you're following and recognize that my duty here is to plan what the market maker is doing to a high percentage and be a really great follower. There is no emotional attachment to my joy there. Although some of you would say, well, you got confidence, you're happy, that's all emotions. I'm happy because I'm a logical trader. I'm confident because my percentages work in my favor. Do you see how those words work completely differently when I'm looking at it in a logical sense as opposed to an emotional sense? Type in the chat if you understand what I mean. Say yes or say no. Thank you. Now, when you go to the screen and you're sitting there and now you're getting ready to go, how many of you get to the screen and are already questioning how the day could be instead of saying, what can I plan to look at? What stocks are setting up for me to look at? Who comes in and says, I need to find an information, I need to find a stock, look for prints, look for volume, plan a setup? Who does that straight away as opposed to who's the person that comes in and says, okay, let's have a good day. Let's not mess it up. Let's just be smart. Let's not take too many trades. And at the end of that thought process starts telling themselves, all right, come on, today we're going to make money. You know what? We're not losing money today. Yes, there was a bad day, but today's going to be a good day. Let's just take it easy. You know what? We'll lower our shares if we have to. Who's found themselves telling themselves talking to themselves in that format at times, or more times than not? Give me a yes or a no. Okay, Trevor said used to a lot. Obviously, he's been here for a while and he's slowly progressing himself as a trader. Who else? Good, Millen. How about some of the new students? Kevin Terrell, Rich G. What about you guys? When you get to your computer, just type it in. You don't have to come on if you don't want to, but just type it in and tell me when you first get to your platform in the first, let's say 10, 15, 20 minutes, how do you feel? But more importantly, 10 minutes before the open, how do you feel? Okay, good. I like that, Rich. I wait to see what the day provides, but always excited. I like that. But are you planning what the day means? Are you planning your business approach? Because at the end of the day, an excited trader without a plan is retail. An excited trader who just comes and sits and sees what the day's going to bring is hoping. We can't hope in the market. We have to plan what we want to do. I try to keep a clear mind going into open, It's something that has been developed. I need to be more detailed in my approach. So, Kevin, the fact that you're going in with a clear mind, that's brilliant. That takes a lot of work. Let me tell you, that took me years to understand that. Now, having a clear mind and doing everything you can just to have simply a clear mind could also lead you back to the information or to the points that you didn't want in your mind, which is why I always go back to, in order to maintain clarity, you must understand how should you navigate the way that you sit here. So if you navigate in a logical manner, if you navigate that I come here to get business done, I come here to be a great follower, I come here to do nothing but to interpret the data, create percentages, create a formula, and that's all I care about. You literally have to come here when you're trading like a robot. I literally sit here like a robot. Like, for instance, this morning, this morning, my girlfriend, she was like, well, what's planned for your day? What's this and that? And I was like, listen, Jack, you know what time it is. You know what my mind is. You know how important that is. And she goes, yep, understand. I said, those questions can wait. That question has no place for me this morning. Because at the end of the day, for me to have where you says here, I need to be more detailed in my approach. That's so key. Because like everything, you have to have a plan. And in the stock market, now, I do understand a lot of you will not be doing the day trading like some of us do, where we are buying and selling shares actively in the market. But even if you're sitting here and you're looking at prints and you're looking at how shares are being acquired after we teach you about prints and we teach you how to see how they're acquiring shares, that in itself is work. Because let's say, for instance, you're looking at, let's see what stock, IONQ. And IONQ for many days started buying at 27, and we saw it buy 8, 10, 12 times, massive, massive positions. If you're just sitting there looking at buying and buying and not planning that the more they buy, what does that mean to the outlook of the target? What does that mean to the time frame for them to meet targets? If you're not looking at how the more they buy, the longer it takes, or if they are buying and it's not as much as expected and they're getting their buying done in 2 to 3 attempts, and you know the time frame shorter, and you're not planning how that buying looks and how that time frame looks and what the pullback on that massive buying. So for instance, 27 had buying about 12 times. That is absolutely monstrous. Now, can someone tell me where did that pull back to in one day? In literally one day. That pulled back to about, I think, if I'm not mistaken, somewhere around $22. That's a $5 pullback. But when something has been hitting 27 for a few days and buying tremendous amounts, that's a very feasible and reasonable pullback of $5 calculated. It could easily have gone to 20, but 22 is $5. Absolutely respectable. Now, if I was going to take options, would I want to take options after it moves past 27? Or being someone who now understands and can read prints, which basically tells me what's going to happen in the future, do I take options positions when it pulls back to 22, knowing I'm $5 away where the massive build has acquired? Or do I take it after it moves past 27? The fact that we can read prints gives us a massive advantage that we in the interim can get an even better price point than the market maker themselves. Who over here recognizes that? Could you imagine that person at 27, let's just say, let's make a number up. Let's say that person at 27 had purchased 2 million shares. How much is that? That's $54 million that they've put at 27. And then they pull it back a whole $5. And on the pullback on $5, we know they use that to build more shares. but now your entry is at 22 or 23. You are $4 or $5 below the market maker. But more importantly, he's building a position. So that 27 has a minimum of 30 with the possibility of 35. That swing and just you taking that position tremendously increases the gain in your contract value. So no matter what you're doing, you got to come here and you got to mean business. And you can't mean business unless you have a plan. How many people here have owned their own businesses or have family that own businesses, yet that person never goes to their business? When they walk in, they hope it's a good day. They don't do any type of marketing. They do not train their teams. They do not make sure they have the right SOPs and protocols. It doesn't last long, because the reality is this: you can't hope to get through every day. You have to plan how to be successful. And part of planning to be successful, whether that's trading, life, or business, is you got to plan for the learning. You got to plan for the mistakes. You got to plan for the lessons that got to be learned. That comes first. Until you get through all the things you need to learn, you're not going to become consistent at anything. So if you're not planning on how to learn, if you're not planning on the mistakes that need to be made so that you can learn, if you're not planning on how to fit all these parts into the puzzle so that once you get past this stage, you now have a consistent understanding of what you're doing, what do you think is going to happen if you're not planning that? Do you think you're ever going to get out of that conundrum of coming here and having that emotional morning, not sure what's going to happen that day, not sure how you're going to feel afterwards? Or I'll give you a better one. How many of you have gone round and round? It's been weeks, months, and years. And the worst day ever for a trader to not do well is what day? And I remember from all my years, what day do you just not, you want to make sure that you have a green day? What day is it? Think about it. What day do you want to make sure you have a green day? Is it Monday? Is it Tuesday? Is it Friday? What day would you want to have a good day? It wouldn't be Monday. It would never be Monday. It'd be a Friday. Who wants to go into the weekend knowing that they had a bad trading day? How many of you get really excited when you've had a green day? Say yes or no. How many of you don't care if you had a green day or a red day, as long as your trading is improving and you are focused on your percentages and you're focused on your management and you're focused on your protocol? Whose mindset is there? Takes a lot more to think now, because the reality is you didn't think about it that way. Because is there such thing as a green day and a red day? Or is it, because let me ask you something. Let me ask you this one. If I made $1,000 today, but I was a 40% winning trader, which means I lost 6 out of 10 trades, but I just happened to get so lucky on one trade and I got in, it wasn't even a high percentage, it wasn't even that planned, but then some news came out and it shot up $2 out of nowhere and I got out quickly. Or I took the next day $100 loss. I took 3 80% trades. Two of them only went for, sorry, 2 of them losses. So I lost, let's say, 16, 17 cents on each one. And the third one, it kept building. So it never really made its way to its price target. Let's say that price target was $1 and it went up 50 cents and it just started building. Very much like that trade today on SPAI, where I said 4, but 350 decided to cap it, and it printed there 3 times. Which was the better day? The $1,000 green day or the negative 100 red day? What was a better, which day did I trade better? The reality is this, and you're all right. As long as the path keeps going up, I'm okay with the red days. It's about what you can repeat day in, day out. Agreed, David? Rich, you're absolutely right. The negative 100. As long as you adhere to the process, take wins and loses correctly, no need to be excited, sad whether it's green or red, which is true. That's a good statement, Millen. Kevin, the red day. The day we execute our plan to the T, more patience in our market. You didn't force it. Now, you're all correct. You're all correct on all the points that you made. But think about this. Think about where my trading would be if I only allowed the conclusion to be based on the outcome. So a negative 100, oh, what a shit day. I need to do better tomorrow. $1,000, whew, I can breathe. I did good. Because if I had the negative $100 on great trading and I repeated that for a month the same way, how do you think my month would look as opposed to me repeating the same type of trading I did for the $1,000 green day for an entire month? Which month would look better overall? I repeat that again. I don't think you guys quite understand this. If I traded the exact same way as my $1,000 day, which means I was a 40% trader, so that is very, very low. I never planned anything. I just bit of FOMO, no real management, but I got really lucky with that one trade that had nothing to do with me planning correctly. And if I had that trader's mindset for 30 days, as opposed to when I lost $100, but I took 3 80% trades. And unfortunately, as it does happen, out of the 3 80%, 2 of them didn't work out. 1 worked out, but it didn't go to full range. If I continue with that mindset, correct trading, planning my trades, making sure I take the percentages, managing to the T, and I took that for 30 days with that trading mindset, as opposed to the very risky trading mindset or the retail gambling mindset that somehow through luck made me $1,000, which one would you want to be? Which one would do better after 30 days? You guys are giving too many deep conversations. I'm asking for simple answers. Your trading, your mind, everything needs to be simple. I don't need deep answers. I ask again, do you want to be the minus 100 trading mindset, or do you want to be the 1,000 profit mindset, but with that type of trading? Which trader in the end will have better success? The trader that did the negative 100. Thank you, Rich G. Appreciate that. Because not only obviously is that person trading better, but that's the trading mindset that will continue to progress. At the end of the day, the outcome is the outcome. We cannot control the outcome. What we can control is the process. What we can control is what we can control. You can control how you analyze and how you manage. You cannot control in the end what the outcome will be. And why is that? Because we can't control stocks. We aren't market makers. We can only follow what we see to a high percentage. So, how do you manage to stay fully focused during a session, especially when you have a private life and work? I come here to do business. My mindset is logical. I'd have zero emotional attachment to trading anymore. I realize it has no place in trading, but I realized that if I focus on the logical aspect, if I focus and get excited about how disciplined I am, if I prioritize making sure that when I come to the screens, I'm looking for the raw data that will allow me to simulate possibilities of a trade, there is no space for emotional tolerance there at all. There is none. So that's how you want to do, that's how you would get there and be focused during a session. Now, as Sid said, if the emotions creep back in and you're like, oh God, now you're sweating a bit, you're off track a bit, what should you do? Which is also part of being disciplined. We are human. I have moments. I had a moment 2 days last week where a lot of things that were going on in my business and personal life started basically stepping into my trading in the morning. My mind was not where it needed to be 2 days last week. My first trade was a loss. What do you guys think I did? What did Doug do? Did he run away? Did he try to force trade? What do you think I did? Good point. So, Rich, at my level, do you think the time it takes for me to understand what's going on is different than for you? So basically, can I put myself back into perspective a lot quicker than anyone else who's learning to trade, who's a novice trader? The answer would be yes. So basically what I don't do the whole watching only. I don't take a break, let the emotion go, nothing else. Do you want to know what I do? I speak it out. I give myself grace. All I say is, what is the issues that are clouding the moment? Right, you've got this going on, you got that going on, you got this going on. Can that be taken care of right now? And if you need to take care of that right now, we can come back to trading. The market is not going anywhere. We can come back to it later on. We can come back to tomorrow. Or do you want to get back in your mindset? That is literally all I need to do. And how do I do that? Like Kevin said, I'll just get up, walk around the kitchen, compartmentalize whatever needs to be compartmentalized, come right back and sit here and remind myself one thing and one thing only. The distraction is the emotion, nothing else. So that emotion straight away gets compartmentalized. That's all I do. Now, for any of you who are getting to that stage where you have more of a control over the mindset needed as a trader, what I would tell you to do is sit there, exactly as Rich G said, sit there and watch. And let me tell you something. Do you think it's punishment watching, or should you be watching to learn anyway? Because the reality is, if you're coming and you're having bad mornings, you're having emotional levels, and you're having these inconsistencies, the reality is you're not where you need to be. So you should be watching and having more screen time anyway. You should be learning more. You should be watching how certain information correlates with the move, understanding how would you manage a trade. So at any time that happens, one thing I'll always say is have grace on yourself, because I used to, when I first started trading, get extremely frustrated, blame myself for everything, and that will just never end. And all that does is never ever progresses you as a trader. No matter what we do, at the end of the day, we are looking to progress. You're going to have your moments, but treat those moments with grace. Take it lightly. Don't get frustrated by it. And now, if you have external factors in your near environment that aren't helping your trading, that is something that honestly makes no sense that you haven't fixed. If your trading platform is in your front room where people are sitting, is that a smart idea? to be trading around family members or people who are speaking and having conversations and have the television on? Is that even helping your trading, or is that you just being more detrimental for no reason? Or if you're sitting in your room and you know next door that you got a family member or someone who's really loud, and you could simply go there and say, you know, I'm a trader. Could you do me a favor for a couple of hours? Could we all just respect the environment? Like, you got to set the foundations around you as well. So I live alone. I have my own place, so it's a lot easier. But I can tell you one thing: if I was living and if I was married, if I had family, I would have to set the expectations of what needs of how they can of how the environment needs to be for me to be able to trade correctly. Because listen, we all know this: trading is not easy at all. Definitely not easy. So the last thing you want to do is make it harder by allowing things that make it harder. So do what you must to make sure that you create an environment that makes you confident, makes you comfortable, gives you joy. But at the end of the day, it doesn't mean anything. And none of those emotional attachments are correct unless they're attached to logical trading, not emotional trading. The emotional traders are the ones that do FOMO. They are the ones that we love. They're called retail. They're the ones that make us money because they're the ones that help push positions because of the way they trade. So that's that one. What's the next question, Millen? Can you discuss the approach to ensuring quality screen time versus quantity? Yep, brilliant. So just going back to what I was saying to you guys. So when you come to watch screen time, how many of you, let's be honest, when there's not things actively moving, let's say in the first 15, 20 minutes, start getting bored, start looking away, start getting their phones out and going on their social media or texting friends? How many of you very quickly get distracted when there's not enough going on? And what do I mean by enough going on? The potential for you to make money in a stock at that moment. If you're listening to me, I know you can type, so please type in. Perfect, as expected. We've all been there. I've been there for years too. How many of you have realized that somehow, in the most interesting way, that your trading is not progressing at the level or speed that you believe it should? The reason it's not progressing is because when you come and you're in front of the computer, what you should be looking for is not just bars up and down, volume here, big prints that get you excited. You should be looking for what is required for a trade. So if you're a day trader, meaning you're a day trader like we do, from now on, I'm going to make it clear. If you are buying and selling the same day in and out and day trading, you'd be looking for stocks that have range, that have volume, that have controlling prints. Now, once you see that established, watch it. Watch what it does after those prints come in, even if it's low volume. See if they're acquiring. Now, look at IONQ. I was telling you, I see short-term prints. Who saw those short-term prints? They were at 68. Why is that important? Because I'm going to watch what it does on those 68. Am I going to see a continuation of similar print personality or build? Is this going to give me some insight into what could come later on when volume or if volume comes back in? Because at the end of the day, if they're doing work in low volume, are they doing it for no reason? Or is there a reason behind it? Whether that's going to be for today or tomorrow or next week. When they are buying and you can see them clearly accumulating, there's a reason for it. So what I do is I will watch every part of it to see when it comes, what it does, because the more I'm watching how the stock reacts with the right variables that we use, the more I can understand and learn and build a database that will help me manage my trades. Because the more you're watching the screen with quality and with a clear sense and understanding of what you're looking to find in there, all that does is it allows you to build the correct database so that when you go in and start managing your trades, you're going to understand what's happening because you've seen it multiple times, because you've looked for it multiple times, because you've looked for it and followed it to its outcome multiple times. If you go there and stare at screens with no plan, so I'm looking for a trade, I'm looking for the prints, I'm looking for volume, and then I want to see what happens with those prints and volume. I don't care if it does nothing on it. At least I know what nothing looks like. I don't care if it has a fake move and doesn't do anything again. At least I know what that looks like. So every time I'll say to you guys, watch out here, big bar coming down. I don't say that hoping that I'm right. I say that because I've watched it thousands of times, and typically when you see that type of money flow, when you see that type of setup, when you see them trading it in that method, it's not going to follow through. It's not going to take its way to where you need it to go. It's not going to go towards its target. But you're never going to know that unless you are watching continuously for a stock, for a trade, and then you got to see it through. You got to see it through to the end. So for instance, IONQ, how many of you ever notice that I'm always talking about stocks that I see big buying in for days, for weeks, even for months sometimes. And I'm planning the whole time what that should mean, where that can go. Who's noticing that with me? How many of you are doing that? Because here's the reality. What do I need to do to know that? So if I want IONQ, MARA, DJT, OKLO, would I know that unless I'm following and have created a plan for those stocks of the information that I see and then add to that continually until, and then I follow it through to the end? That's how I do it. I have intention for what I do when I'm at my screen. Do you have intention when you're at the screen? You got to treat every time that you're watching a stock, every time that you come to the screen, as if you are looking for that next play. And remember, when you're looking for that next play, until you've built up the correct database where you know what all your setups are, how those setups work, what those setup percentages are, and the opposite of that setup not working, you're never going to truly be confident in your ability to manage your trade. And the only way you can do that is you've got to sit and you've got to watch and watch and watch and watch and watch so many for months and years, and just continually watch what happens under conditions after you see the variables that you need for a trade to even come into play. Okay? Does that answer it for you guys? Just give me a yes or a no, please. Perfect. Okay, it's 12:50. Now I can do one more question from here, or if anybody wants to come on and ask me something in regards to what we spoke on, I'd be more than happy to speak on that, and Milan can bring these questions back for next week. So would you guys like me to answer one more question that we have sent in, or does someone have anything they want to talk to me about what we spoke on in the session? Don't be afraid to come on. Don't forget, this is your trading. All these sessions are for you. Okay, I see that. One more question. No problem. Milan, need the next question, please. How do you determine when to use shares or options for a swing trade? If you choose an option, how do you determine the time frame based on the prints and time frame? So let's see what the difference between these two instruments or tools that we can use to trade a stock. If you buy shares, what's the positive and what's the negative? The positive is if you own the shares and those shares are going towards the direction you need them to, but it doesn't meet the target for a long time, it won't matter to you because you own shares. You do not have time decay. The cons of buying shares: you are limited to buy what you can afford. You are limited by what your monetary value in your account is, what your risk threshold is. And also, if you bought it and the next day it pulled back $1 or it came back and built more, are you able to take that negative position? When you're swinging a trade, it's going to be extremely hard at times to control your losses to 15, 20, or even 25 cents. People who swing shares are also accepting that they could be down $1 or $2. So it's your risk appetite. It's also, do you like the stock long term? Are you an investor in this stock? So for instance, if you bought shares of Palantir at 10, are you right now looking at your target, or are you saying I'm an investor? What do you think you're saying right now with a company like Palantir? You're an investor. You're not going to sell those shares. That could go up another 10 times in the next 5 years. But if you bought DJT and you swung DJT, were you going to hold it, or were you basically trying to trade that to the next targets, knowing it was based off the elections? You're going to trade that only. Now, the beauty about options and why I only swing with options, I do not buy shares. One, I am capped at my loss. So if I paid $200 for a contract, the worst loss I could take is $200. But when you buy a contract, for those of you who don't know, it's the equivalent of 100 shares. So if you bought 10 contracts, that's 1,000 shares. So if it was $200 for a contract and it was 10 contracts as 1,000 shares, then you'd be paying $2,000 to control 10 contracts or 1,000 shares. Now, let's say we're talking about IONQ and I want to buy 10 contracts of IONQ. I'm going to do the strike of 35. I'm absolutely making this up. 35 for February. The value is 2,000, so I've got to pay 2,000 to control IONQ, 1,000 shares for 3 months. That cost me $2,000. Now, we aren't hopeful when we buy options that, oh yeah, IONQ, I think it will go up. I think it's a good company. I heard Kramer talking about it. We have far superior information than any type of news, any type of hope, any type of chart. And what is our far, 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 far superior information called? Prince. Absolutely, Millen. Thank you. Tape, Trevor. Kevin, that's right, Prince. So we know we've got the golden goose of information. What does options allow me that shares won't? How much would it cost me to buy 1,000 shares of IONQ? How much would it cost me to buy 1,000 shares of IONQ? Millen, 28,000, Millen. I don't know what you're looking at. It's 28K. How many contracts could Doug buy with 28K? Let's see how good you guys' math is. If it's 2,000, allows me to buy 10 contracts. 2,000 allows me to buy 10 contracts, which is 1,000 shares. The same as paying $28,000 for 1,000 shares. I can buy 140. Thank you, Kevin. That would mean, Kevin, how many shares am I controlling? 14,000 shares. 14 times the amount for the same amount of money. Now, if in 3 months, Kevin, IONQ didn't never ever went past 28, I would lose $28,000. If I owned 1,000 shares and it never went past 28 and it took another 2 months, the beauty is I haven't lost anything because I own the shares. The reason I choose options is because we have the most valuable indicator, the most valuable information you could ever find, and that is prints. So when I have prints, I want to maximize how many shares I can control. Because one, I've already planned those prints. I already know that certain prints and certain setups work out 70, 80% of the time. And when I know that my percentages are that high and I know that this will probably work out in the next 2-3 weeks or 2-3 months, why would I go in and trade like a retail? Why would I go in and trade like people who have no clue? I am following the man who spent $52 million. Should I be confident in using my leverage when I'm following someone who put $52 million at a level? I love that answer by Trevor. Oh, yeah. Let me ask another question, Trevor. Would you, Mike Tyson in his heyday, are you going to back Mike Tyson to win against a regular man off the street, or are you going to back the regular man off the street to beat Mike Tyson in a boxing match? And Mike Tyson's 22 years old. That is such a great answer, David. The one who controls the ring. That is so well put. Because the reality is the market maker controls the stock. He is controlling the movement of where it's going. And when he puts money like that, and it's not a long-term investment, but a short-term price target, can he control it for a short amount of time to reach his target and then allow it to do what it must? Yes or no? So if he can do that, what must we make sure when we're in options, when we are in contracts, when we are with him? We must make sure we are following him to his target. So if you're following a high percentage market maker to their target, whether that's 1 week, 3 weeks, or 2 months, and they meet their target, you get out when they get out. So the difference in our form of trading is we have the golden egg. We have prints. I want to use all the leverage I can and maximize the percentage, maximize my potential of a trade. I mean, for instance, some positions I'll take 500 calls, 500 contracts. That's 500 contracts is 50,000 shares. 50,000 shares of IONQ. If I was to look to say, oh, guess what? I want to buy 50,000 shares of IONQ, I am going to be paying about $1.4 million. As opposed, if I want to do the same with 500 contracts, I'm going to be paying $100,000. Is there a big difference between 1.4 million and $100,000? Absolutely. You get so much more leverage. It's unbelievable. And even if you look at it in the most basic sense, if I wanted to take IONQ and I saw that all this buying at 27, 28, now at 30, and let's say that we had a price target of 35, and I took the 35 strike for February. And I even said, you know what? I just want to get one contract. So that's controlling 100 shares. I'm going to pay $200. Is that still better than saying I'm going to buy 100 shares of IONQ for $2,800? The reason that a lot of people are failing in options is because of the time decay. And the problem with time decay is if IONQ looked great, but there was absolutely no market maker in there, What do you think IONQ is going to most likely do for the next 2-3 months if we do not see the presence of a market maker building a position that needs to meet a target? We could be sitting in the same spot for 3 months. I do not enter options until I see big money has entered. That gives me the start point. That allows me to take options, and that allows me to have the right time decay because I am taking it when they're starting. I am taking my options when I see that they're acquiring. Do you guys see how much of an advantage that is for us? Do you guys see what a big difference that is? That we get to take our options at the right time because we're waiting for the prints to come in. So for instance, right now, if you were, I don't know any, I'm just trying to look across. If you look at Palantir, let's just go back to Palantir. I don't know who's got it up, but Palantir for I don't know how long. I'm just going to quickly have a look. But Palantir, if you look at Palantir, it basically went from 15 to 25 from beginning of last year all the way until about July, August of this year. If you had options in that, how would they be looking? If you took options last year and you said, I'm going to have a price target of 30, it built for so long. So when you see consistently loads and loads of build day in, day out, do you think that's going to make its target next week or in 2 weeks? Or is that people basically saying we're investing in this in the long term? We see Palantir as a long-term company. Is that the one that you want to buy options? Or is that the one that you want to do your research and say, do I agree that this is a great investment? Where would that one fit in? Now, if it has completed this massive build and broke past 25 on huge volume, and now it goes to 26, 27, 28, and it just continues buying up, is that more of a perspective to get a shorter term option duration, knowing that the massive investment base is over? Now, the information that came out in earnings and so forth is saying that this company has gone from high prospects, high possibilities, and now the earnings are coming slowly in line with what we expected. Does that change how it becomes a great investment to where now we're going to have money time trades where we know we can reach new price points? Yes, now we know the stock is coming off the foundational base. It's proving its worth. And as the revenues increase, as the news come out, as new products launch, it has to go up in valuation. That means the price is going to get higher. And when that happens, you will see there's not as much of a compounding effect of months of acquiring as much as you'll see that the buying reflects more of new highs, new price targets. That's when you know you change from seeing the type of foundational long-term investment to where now the company has caught up with what the investors had prospected for this, had hoped that this company would do, and now it's doing it. Now we can trade it. Now we can do options in the interim. But you've got to be very mindful about what that buying that you're seeing is for. Is that long term? Is that short term? Or is that playing in line with the growth of the company? Make sense? Perfect. Okay, so our session is now complete. Went over just a little bit. I'll still give you guys a few more minutes. Does anybody have any questions on what we spoke about today? Feel free to type it in. I don't mind. If you want to come on and speak, you're more than welcome to. If you'd like to type anything in, please feel free to do so. Okay, with that being said, this was a lovely session. I thank you all as always. I hope I was communicating and answering these questions as it was hoped for. And I will talk to you all in the room.